In this video, I'm going to answer if Nike stock is a buy. I'm going to use my simplified 6-step framework, so let's get right into it. The first step in my framework looks at customer value, and one of the things I look at here is revenue growth. For Nike, from 2012 to 2022, revenue has almost doubled from 25 billion to 46.7 billion. Of course, most of you are familiar with Nike. They sell higher end athletic apparel sold through their website, their own stores, and through third party partners. Nike has boasted a net promoter score of 36. Net promoter score measures customer loyalty. And if we look at the scale here, a score of 36 is great on the scale, a great net promoter score for Nike. The next step in my framework looks at unit economics. I want to see how much money is the company making selling its products. And gross profit margin increased from 2013 to 2022 from 43.6% to 46%. Nike management believes this can grow even higher as it takes on more of the direct to consumer sales of its products and relies less on third parties, cutting out the middleman. Management believes it can earn a few hundred basis points in increased gross profit margins. Meanwhile, operating profit margin has averaged 13.4% in that time. The next step in my framework looks at the total addressable market, and the athletic apparel market is estimated to be worth $567 billion by 2024, so a massive market opportunity for Nike. The next step looks at competition, and Nike is competing with several rivals trying to capture the same customer. Interestingly, competition among participants is strongest in promotional activity, in advertising and signing major sports teams, athletes, singers. Think of the Kanye West deal with Adidas to wear and promote their products. This is actually good news for investors because advertising and marketing promotional activity can be differentiated where customers go with a certain brand because it has a relationship with a certain customer. Think of how popular Michael Jordan has been for Nike. It's generated billions of value for Nike having that relationship with Michael Jordan. And so that's a differentiated um, ability there. There's only one Michael Jordan in this world, and there will probably only be one for the rest of eternity. And so for Nike to have Michael Jordan means every time it releases a Michael Jordan related product, it can charge premium prices for it, and customers will happily pay. Another good thing for investors about competition is that price points have been trending higher. Prices for athletic shoes are trending higher for basketball, tennis, and football, baseball. All of these kinds of shoes, the price points have been trending higher. And that's across the board. Adidas, Nike, Lululemon, they've all been kind of lifting the price points higher, and that's good news for investors. The next step in my framework looks at valuation, and I judge Nike based on the price to earnings ratio. And going back before 2000, all the way to before 2014, the price to earnings of its most recent valuation at 31 is not cheap. I would say going back, it's about its average valuation if you ignore these peaks, these one-off peaks of valuation that Nike, it boomed and then it came back down and then boomed and came back down. If we judge it ignoring those peaks, it's on the higher end of its average price to earnings ratio going back in that time. And the final step in my framework looks at risks. And one of the main risks I note here is a meaningful part of Nike's business, current and future, is in China. The geopolitical and COVID policies of the country are a risk to Nike both in the near and long term. And then the second risk I note here is there are significantly elevated inventory levels for both Nike and its competitors. that could lead to heavy discounting after the holiday period. Nike, Lululemon, Walmart, Target, Home Depot, Lowe's, um, uh, and I noted some home goods retailers, just to make the point that all of these companies have very high inventories. They overreacted to shortages during the pandemic, and now there's a glut of inventories for all of these types of companies. And I believe there's some promotional activity for the holidays, but that could get worse after the holidays. Some of these companies may be waiting to see what holiday sales are going to be like, and then following the Christmas holiday period, there could be some major discounting going on, which could hurt profit margins. So now that I've looked at each step in my framework, let me give Nike a grade for each step. And, it's done really well here. It's got straight A's in the first four categories. An A in customer value, we saw a very high net promoter score. An A in unit economics, we saw excellent gross profit margins with prospects of increasing even more. A total addressable market over 500 billion, and a competitive environment that allows for differentiation and higher price points longer run. Risks, they get a B here because of the inventory levels and the risks from being having so much of its business in China. And then valuation, they get a B because the stock is not cheap. It's not expensive, but it's not cheap. So to answer the question, is Nike stock a buy? Yes, it is. Nike stock is a buy right now. The company has a long history of achieving customer loyalty, evidenced by its high net promoter score, growing gross profit margins, massive market opportunity, and a relatively fair valuation. For that reason, I say Nike stock is a buy right now. All right, that's all I've got for this video. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.